Time now for On the Radar, when we ask an investing professional what they're looking at in today's markets. Gavin Graham is our featured guest today. He's CIO, Chief Investment Officer, and Portfolio Manager at Spire Wealth Management. Gavin, you think it's time for investors to take some profit on U.S. stocks, which have rallied in a big way over the past couple of years. Down so far in 2025 are the S&P 500 and the NASDAQ Composite, but up in a big way they were for the prior 2 years. Take some profit there and deploy it in European stocks and in gold mining stocks, correct?
Yes. And again, for a start, it's never wrong to take a profit. It's a truism to say that. And people go, oh my gosh, I'm going to pay capital gains tax. And you go, well, you got a capital gain. And especially when the markets, the S&P, I think, was up, S&P 500 was up 25% 2 consecutive years, which is A, very rare, and B, it means whatever your initial asset allocation was to US stocks, it's a heck of a lot larger now, unless you've actually been taking some profits on the way. As you noted, the major US large cap tech stocks, the so-called Magnificent Seven, are actually off this year. NASDAQ's down about 6%. And some of them, like, for example, Tesla is off over 40%. I understand Mr. Musk has one or two other things to keep an eye on apart from running the car company. But the major thing is that they are very expensively valued. And unless the earnings growth continues at the same pace, which, owing to the fact that they are so enormously large already, is very difficult, it's hard to see that the growth implied by the valuations is going to remain at that level. And if in turn that leads to sentiment changing somewhat and that people not being prepared to pay as high a multiple, you could well see a fairly substantial pullback. I think the NASDAQ's actually in correction territory now, Paul. It's off over 10% from its high just before Christmas. And so taking some profit on those and putting it into areas which have lagged very noticeably, particularly international stocks, and particularly within that Europe, might not be a bad idea, because Europe's full of world-class multinational companies, but because they have to be in Europe, are valued much less expensively than in the US. And secondly, we were talking about the potential change in the Canadian political landscape and the willingness to actually look at things which had not been permitted beforehand, such as east-west pipelines, for example, or interprovincial trade barriers. In Europe, and particularly in Germany, it's the same thing. Mr. Trump's unwillingness to continue funding, defending NATO and Europe has led to a complete reversal in what had been the post-war consensus in Germany, and an enormous change. So the outgoing Social Democrat administration, in agreement with the incoming Christian Democrat administration, is proposing to spend, would you believe, Paul, getting on for €1 trillion on defense and rebuilding infrastructure. And that is being mirrored elsewhere in countries like Germany, in France and in the UK, a greater willingness to spend on defense. One of the issues with Europe was that it was pretty old economy stuff. It was essentially metal bashing. It was autos and capital equipment and the rest. But what better to actually start making new armaments and tanks and aircraft and the rest of it, which you're going to need, because if the US security umbrella is no longer as secure as it was, you're going to need to actually up the amount you spend on defending yourself. And as a result, European stocks have been on a tear this year. Germany's up over 20%. I think the MSCI Europe's up over 15%. Even the boring old UK is up, more than 12%. So the outperformance against the US is very, very noticeable, and it's been a big, big change.
That's Gavin Graham. The NASDAQ Composite, as Gavin alluded to, is down almost 10%, down 9.8% from its peak. Any meaningful decline today will push the NASDAQ into correction territory. Still ahead, we'll update you on the markets and head to Ottawa to speak with Bloomberg's Laura Dillon-Kane and hear what lies ahead for Mark Carney as the new Liberal leader and incoming Prime Minister of the country. And our phone lines will open soon for our first call segment. Get ready to call us at 1-855-326-6266 or send us an email at firstcall@bellmedia.ca. Gavin Graham will take your questions on North American large caps, commodities, and Canadian bank stocks.